Doug Simon from Tredas is our corn and soybean market analyst this week. The U.S. Department of Agriculture next week will release its final numbers for the 2017 U.S. harvest. After its initial projection in August, the agency increased its corn production estimate in each of the 3 following months. November's projection of 14.6 billion bushels was 3% larger than the original number. The USDA's soybean expectation in November was 1% bigger than in August. We talked with Doug Wednesday afternoon about his thoughts leading up to the guesses on production, supply and demand, and grain stocks, but we started by asking how corn and soybean markets entered the first week of 2018.
It's been pretty quiet in both the corn and the bean market. We're $3.53 on the March corn, and we're maybe 6 cents off the recent low. And beans, back at the Power and Farming show that we had in December, we were up in the 10.25 on Novi 18 beans. We're probably about 40 cents lower than that. We've rallied back a little bit on the beans, but it's been really quiet in the corn market lately.
The only positive thing right now is really the wheat market because?
Well, it's cold. It's been dry. Kansas wheat conditions are 37% good to excellent, which we haven't seen that low a number in 5 years. In fact, you have to go back to 2012 when it was about 24%. Good to excellent. So there's a little bit of life. If you look at all the corn, beans, and the wheat, the commodity funds are short, and with everybody being so negative there, we're due to get some dead cat bounces in there at some point. I think one of the things we were talking about before the show was that FC Stone had a report out on March corn, showed that the average kind of bounce in prices from that low to the into March was basically about 31 cents over the last 3 years. I think over the 5-year period, it was about 40 cents, and over the last 12 years, it was up toward 80 cents. But that goes back when we had the big rallies into 2012. So, you know, even if you just look here at the last 3 years, we've had some modest rallies. So you'd hope we'd be able to, with these low levels and quietness and low volatility, that would give way to a little more excitement at some point here into the spring.
Well, some of that could come in South America. What do the current weather conditions look like there?
They're having La Nina conditions, cold temps out in the Pacific, and which will have some bearing on our crops here in Nebraska, you know, in the upcoming year. But tends to leave them a little drier, a little hotter, and that's definitely been the case in Argentina. There are some areas of Brazil that are normal to above normal rainfall, but just going forward in the different forecasts here, it looks like it's going to continue to be warm there and dry in Argentina. Not that it's a massive drought, but it's definitely a little less than ideal there.
Their critical period would be when?
It's definitely coming up now. I mean, we're similar to the May through June, July timeframe. I mean, Argentina, Brazil, that's a big span there. Different crops that are going in, but it's definitely a critical period, and that's why everybody's paying attention to the weather in South America right now.
So back here in the U.S., have exports picked up at all for corn or soybeans?
Well, they've been lagging where we'd like to see them. Our export pace on the beans and the corn, beans are lagging about 15 points versus the 5-year average, and the corn's about 3 points below the 5-year average. They're both a little disappointing. USDA actually bumped up the bean exports versus last year, so they have higher expectations, so they're lagging. They're worse off on the beans. And the corn numbers are actually down because of the fact that we had such a big export dock last year, because we had that safrinha crop in Brazil that was low from 2 years ago. We've had a really good export opportunity.
Domestic demand?
Domestic demand's been good. USDA had bumped up both our ethanol use and our livestock use in the WSDA numbers this year, so those are good. We've had pretty good, you know, I think feeding conditions this last fall, early winter. It's been relatively dry. It's been relatively warm except for this last period here. Haven't been, you know, carrying a lot of mud on cattle, so it's been the feeding conditions have been pretty good. Ethanol side of it, we've had tremendous production on the ethanol side, although recently here ethanol margins have been pretty low, actually negative if you look at average numbers from Iowa. Those numbers are not encouraging, but ethanol prices have bumped up about a dime here, which maybe will put those, you know, closer back to the average ethanol plants, put them back on average, you know, kind of a break-even number, hopefully.
Corn and soybean basis levels, have they improved at all?
We've seen the basis levels improve dramatically from harvest on corn. If you looked at some of the, like the Council Bluffs market, they were 40 under for gut slot harvest versus the Dees. Right now, they're trading more toward 18 to 20 under the March. With that 12 cents a carry, that 40 under the Dees is equivalent to 52 under the March. So if we're going to 52 to the 18, that's over 30 cents of basis improvement that we've seen. Beans, we've also seen probably a 20 to 30 cent improvement on the bean basis. When you look at those November numbers, now everybody's out versus the March. You know, there's about 20 odd cents a carry to the March, and we're a little firmer on our basis. So it's definitely improving their opportunities there to move some corn and beans.
We have a slew of data coming out on Friday, January 12th, stocks, production, and production in South America. What do you think the strategy should be going into the report and trying to come out of the report?
Well, one of the things that we're seeing right now, because the markets are so quiet and so, low in volatility, is that options are relatively cheap. Corn and bean option volatility typically be running at 20 to 22% this time of the year. Right now it's about 10%. So with that, options are cheap. So if you have some doubts about what you want to do, if you need to sell corn, for example, the basis levels right now on corn and beans are good. We've had cold weather, the basis levels have firmed up appreciably. Move the corn. If you don't like it because you didn't pre-harvest sell last year, then go out and re-own it by using those calls. Those calls are 5 cents against the March, something that's close to the money. If you go to the May, they're closer to a dime. Typically they'd be twice that. So it's a lot cheaper than commercial storage. And it's a good way, because what's going to happen if the futures rally? If we do get that rally in the March board like we're hoping, what's going to happen to the basis? It's likely to widen. So you have to decouple that futures and basis decision. We always talk about that when we talk about futures basis carry. You got to look at those things separately. If you're doing pre-harvest marketing, you got to sell futures ahead of time, set your basis later. This is a time of year where maybe you have to set your basis and do something on your futures later.